Happy Monday, everybody. I hope you had a great weekend. We're back to our Monday market updates for a while. Another month, then we'll get President's Day or Washington's birthday to close markets again on a Monday. As usual, we'll be with you on Tuesday at that time. Until then, we'll stick to Mondays. Today is January 23rd, 2023. My son Ezra's birthday. Happy birthday. And this is your Monday market update. Let's jump right in, wrap up last week's holiday shortened trading week. No shortage of action, and we'll preview the week ahead. So before I jump in on this, I just want to point out again, these market update videos are to keep up with the day-to-day or week-to-week of the market. It's not necessarily for everyone, but for the purposes of planning, this day-to-day is the noise, not the signal that we need to pay attention to. So just to keep just to give you another example of this, recall that the focus virtually everything right now is on inflation. And this is what we'll keep watching. More on that as we go through the week. I just want to point out the constant hypocrisy in the media and remind you why we focus on the long term. When the CPI came out last, it was noticed that one of the main reasons why overall inflation came down was the cost of oil. Note that it is still sub $80 a barrel. January 31st, 2022, last year, was nearly 84, and it hit over 120 last year. So back below 80, good for all, including inflation, but it seems that the media, some of my own closely read research as well, wanted to discount this. Sort of that, if you take that out, little asterisk by it. That's bad enough because the hypocrisy comes in the coming week when people start to react to higher oil prices again and talking about it being inflationary. In my humble opinion, you can't have it both ways. Should we discount the price of oil and the CPI and other inflation numbers or not? That's why, for planning purposes, we'll focus on the long term and the trends. So please keep in touch. We are having the 2023 planning meetings now, and let's put a fine point on what our goals are for the year, not only in the Q1 or the first half, but for even all of 2023 and beyond. Let's focus on the long term and let's plan accordingly. Sorry for the brief deviation from the update. I did get one day less on trading days, so I think I'll still have some time on this one. Last Monday, we know that markets were closed for the MLK Jr. holiday. No trading day there. No trading here in the U.S. The trading week did kick off here in the U.S. on Tuesday. Little change. And eco numbers from home and abroad pushed the markets around. China data was strong. ECB chatter hit in both directions. First hawkish, then dovish. Manufacturing data from the U.S. was pretty ugly. Remember that bad is good these days. Then Goldman earnings were bad. Morgan Stanley's earnings were good. Overall, sideways action. The S&P was down just under 1/4%. Dow was down over 1%. Goldman down 6% will do that to you. And then the NASDAQ was up just under 1/4%. Stocks gapped higher at the open on Wednesday as tech shares led the way, as eco data pushed treasury yields down, and that helped the valuations of tech shares. PPI declined more than expected. Retail sales and industrial production missed estimates, so the deflationary price data and the slowing economy reinforced the idea of that elusive soft landing. Hawkish chatter from Fed head Bullard, nothing new, followed by Amazon announcing 18,000 layoffs, and that followed Microsoft's 10,000 layoffs announced earlier in the day, and that threw water on the mood. Treasury yields rebounded, strong 20-year auction, stocks rolled over into the close. The Dow was down almost 2%, S&P down 1.5%, and the NASDAQ down about 1.25%. Volatility kept up on Thursday as more hawkish Fed heads. Remember a few things. First, at the end of last week, the Fed heads are back in the quiet period before their upcoming meeting. So they had to make noise while they could. And recall that I do firmly believe that at times these Fed heads are sent out to test the waters and jawbone the markets. Good news, no more until after the meeting. Disappointing earnings that Fed chatter led to the selling, and the market did bottom about when the European markets closed. Then they turned around, closed lower on the day, but off the lows. Friday saw S&P and NASDAQ higher out of the gate. Dow was down slightly. Expectations for major volatility due to the options expiration was talk on the tape too. Netflix shot higher, as did Google. Two completely different reasons. Netflix missed their earnings numbers but added almost twice the numbers of subscribers than was expected. Google up on layoff news, 12,000 more people. These are people, remember. So much has been made of these numbers, but these are people. Some of you may know, out of a job. But that's a headcount change for Google parent Alphabet, and thus stock goes up. By the end of the day, markets all up for the day. Dow up 1%, S&P up almost 2%, and the NASDAQ up over 2.5%. Could not pull them out of the red for the week. The Dow was down over 2.5% for the week. S&P a bit over 0.5% drop on the week, and the NASDAQ actually up about 0.5% on the week. Looking ahead into this week, you'll see news items about the debt ceiling and how to avert default of the U.S. bond payments or missing other payments. I spoke about this a few weeks ago. Yes, we are at the ceiling now, but in typical government form, the arguing has just begun. While the Treasury will use extraordinary measures to keep us solvent for at least until the early summer. summer. That's the estimate. And rest assured, this is one that we'll keep in the headlines. I'll keep you informed on that. Earnings season is in full force, and this week's a big one. Everything from Microsoft to Tesla to Verizon, Boeing, and a bunch of others. I'll be waiting to hear from MasterCard and Visa. Those two, along with the banks, can help us see how the consumer, remember 70% of our economy is the consumer, how they're holding up and spending. Eco data will be plentiful, but a lot of noise. The signal, wait for the PCE index, one of the Fed favorites. That's on Friday. We'll also get some Q4 GDP estimates. That's a rear view look at that. Watch for the eco data noise to swing things, and more importantly, look for the earnings calls, forward guidance to move markets. There's sure to be fireworks somewhere, at least looking ahead, if this looks like the market moving news for the upcoming week. As I mentioned before, this is the short term. Keep an eye on the long-term plan. Keep in touch and come back on Friday for more planning thoughts. There are a lot of new situations that we're exploring. See you then. Have a great week.